Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
To rent or to buy, it's one of the biggest decisions when it comes to housing. But which is the better decision for you? Hi everyone, my name is Louis and welcome back to the WangHiro Personal Finance Podcast. If you're asking yourself this question, then I'm here to help you answer it. The answer though isn't a straightforward one. But we hope that by breaking down all the factors you need to consider, you can make an informed decision about whether renting or buying is better for you.
Yeah, I guess that's right, Louis. Most people in their ages of between 20 to 30 today face this dilemma. And the funniest part about it is there's a property overhang, Louis.
Oh, well, what does that mean actually?
Property overhang means there is more supply than demand, but yet there's a demand.
Okay, so there's more supply than demand, but yet the property prices have gone up?
Yeah. Why? Because of mismatch.
Oh.
So you've got properties that are like 800,000 to 1 million, where developers in KL find landmen which are very expensive and they need to charge that kind of pricing for that kind of density. And yet you have a group of 20, 30-year-olds that, may not be able to afford a loan for a 700,000, 800,000 or 1 million kind of property. Then at the same time, you've got property developers that will build somewhere in Negeri Sembilan, right? But charge you like 300,000-400,000. But at the same time, you've got this dilemma of people whether they want to buy so far to travel, So again, there's always this mismatch because in KL, because land is so expensive, unless you bought it like generations ago, land is so expensive today, you must be able to charge that kind of like premium in order for you to make money. If not, and then not forgetting raw material cost has gone up, cement, steel, all these kind of things has gone up, and the value of the money is actually getting smaller and smaller. So you see, wages have not increased in tandem. Property prices have increased because of the reasons I mentioned earlier. So there's this dilemma. So that's why there's an overhang.
Yeah, I mean that also calls to like my memory, like in Miri, we also have a lot of like low cost affordable property, but it's very, very far from town.
Correct.
I mean Miri's that definition is far lah, because like from where I stay to where I work, it's only 5-10 minutes drive.
That's
but
right.
from that place, right? Is Sungai Rai. I don't know if when you're in Miri, do you know this?
I remember.
Very far. It's like
20 minutes, 30 minutes, right?
No. It's like an hour and a half from town.
Wow.
So that is like for Miri standard very far. But the housing there is super cheap for I think terrace or semi-D, 200-300K only.
Wow. Okay.
If you're willing to drive that far, yeah, I'm sure there's takers for that, but yeah, probably there will be still like a lot of vacant lots there because of this problem that we have. So you can see it's a hard decision like for everyone lah. But coming to age, I mean, how did you end up with your first property? I remember that you.
Yeah, it was a very big financial mistake, and I wouldn't go into the grandmother story. But long to short, what made me decide was I had a stable career. I worked for Shell. And the joke I keep on telling people, Louis, is that the only reason why the bank was willing to loan a young guy just started 3 months into work such a big loan was because
3 months into work.
3 months into work, there was a Shell logo at my payslip. That was the only, if you talk about debt service ratio whatsoever, sure cannot qualify one. No way can qualify one because my base salary was 3,250 plus allowance was 1,000 something. So gross was about 5. Okay. Take home probably about 3, 3 high 3s. Okay. My loan amount every month was 2,500.
Wow.
So if you any bank officer in the right mind, they look at the ratio also. No way.
If they did their calculations, I'm sure they didn't in your case. So I mean, did you know that it was not a good financial decision at that time?
I think even though I read Kiyosaki's book and whatever, but for me it was like I think I've fallen into the fallacy that I work for Shell, salary increment would be good. It was a stable job and was permanent staff, and I like the challenge, and I mean like. When you talk to your senior colleagues, right, and you know that in 10 years' time, you're going to earn at least 20K a month. So for me, I fell into that fallacy. But
so you think you were influenced by them?
In a way, yes. And also in a way by my parents, because the moment you get a job at Shell, right, it's like the way they said, oh, study hard, get a good job. and you're set for life, right?
Mm.
And that couldn't be it's so far from the truth, to be honest. Yeah. And I had senior colleagues that today they tell me that they regret buying. He was my former boss. He thought he will settle down, retire, and marry. He bought a plot of land, 21 point.
Oh,
Okay, 21 point is quite big. Okay, I know for West Malaysians, you wouldn't. 21 point is probably the size of a bungalow lot, lot, right, in KL. He built his own house. I think he spent about 1 to 2 million, built his own house, okay, and he thought he would retire. 3 months later, he was posted to China.
oh.
Guess what he did with the house? He sold, you know.
Oh, wow.
The house was so nice. The house even had like, the moment there's an alarm, that means a burglar alarm, the dog kennel will automatically open, and then the German Shepherd will actually come out. Can you imagine how nice the house was? Wow.
Cannot imagine. I mean the attention to detail.
Attention to detail.
His baby and having to let go of it, right? Because of that.
Correct. Yeah.
But would you say like your decision at the time was driven mostly by emotions?
Yes, very much, because here's the funny story, Louis. I was renting a room, and what prompted me to buy? I bought it over a weekend. I flew my parents over.
Wow.
And we went to look at Senadin. You know, the Greenville. I nearly bought Greenville, actually.
Oh, Greenville. Okay.
Yeah, Greenville. Okay. But I didn't buy Greenville because I didn't like the swampland. It was
Yep.
And I bought Kampong Luwak. But not to bore the audience, I flew my parents over a weekend. It was because I wanted to have my own TV set, because I wanted to watch my own TV. The only TV we had in the rental place was in my friend's. He said, "Don't worry, you just go in and just go watch and enjoy, right?" Because he's offshore, 2 weeks on, 2 weeks off. But I said, "Hey, I wanted to have my own TV set, my own TV cabinet." Then I said, "Hiya, if I put it into a living room here and I'm renting this place, not nice, lah." Then I said, "I might as well buy my own house." Okay. Yeah, it was, and my parents said, "You get two things right. Don't buy a car, buy a house first, because it's an asset." So at that point of time, you keep on thinking it's an asset, right? So you cannot go wrong, even though you like take such a big loan. So for me, that was the biggest lesson that I realized, that the moment I bought the house, oh my God, I have no money for anything else, including investing.
Wow. But I mean, at that time, did you have any savings though after like paying the service?
When I moved into the house, the month I moved in, and that time was still my girlfriend. So I keep on like joking with my wife now. I said, like, you see, how many husband can give you a house before you get married? Oh
yeah,
my God.
You secured your marriage.
Correct. And
That's one thing, yeah.
at that month, I only had 256 ringgit left in my account.
Wow.
I emptied my fixed deposit. I emptied all my unit trust investments. I emptied all my stock investments, because renovation cost me 100K up front.
Correct.
Yeah.
Like how long did it go for until you could like breathe a little?
5 years.
5 years.
Yeah,
wow, because of that house.
Because the house you have to pay, right? Then like after that you have to renovate. You have to renovate, because 100K I could only afford the fridge, kitchen appliances, the built-in cabinets, and the grill, and an aircon and a master bed in my master bedroom. That's it. My living room was bare. I didn't have a TV cabinet, nothing. Then when you get a little bit more money, got bonus, okay, pay. Then next phase, another more bonus, pay. Then upgrade the kitchen, upgrade the living room, and then aircon, got money a bit, upgrade. So you can imagine, really breathe. Okay lah, really breathe 5 years, but by the second year, third year, then I could breathe lah, because that's where salary went up. I kept my old car. I didn't spend more. But can you imagine, if your salary increase, you change your car, you upgrade your lifestyle. Wow, I tell you, it's
that's
like
gonna be tough. And I think you like bring up a very good point where sometimes as a young adult you're driven to do these like things, buy such an expensive thing because everyone's doing it. Makes it looks like a very good idea at that time, right? So there's a financial factor, emotional factor. So like today, right, John, how would you do things differently? I know that you are very like numbers driven guy. You have a spreadsheet for us.
Yes,
So
I
how
do.
should we look at buying a house financially speaking? Okay, so emotional and financial. Let's look at the financial part first.
Yeah. Before we go to the spreadsheet, one factor that you just triggered, I should say,
Mm,
you have to decide. If you're buying the house to stay, the spreadsheet may be secondary, which we'll talk about later.
mm,
But if you're buying a house with the thinking that I'm staying, but it's also an asset, I want you to change that mindset. The moment you stay in the house, it's no longer an asset.
but a liability.
It is a liability because you have to take a loan.
Mm,
And even if you don't have to take a loan, you pay the house in cash. Is it an asset or a liability?
mm,
It's still a liability. You don't have
mm.
to pay taxes. You don't have to pay for maintenance. You don't have to pay for upkeep. What is the definition of an asset? A definition of an asset is that you buy something that makes you money, generates you either rental income or some kind of a yield.
Like come cash flow, right?
Correct. But if you decided that this is a house you want to stay, okay, and you want to be able to afford it, you have to think of it in that way. It's my house. I may not, be too tight on the spreadsheet. Okay, but for those of you who want to buy it because of an investment, then you look at it as an investment vehicle. Then that's where this spreadsheet will come in very handy, lah. Okay, so there's this spreadsheet that took me almost like 1 month to build, and then
Wow.
refine. Not 1 month, 8 hours a day lah. 1 month, like 2 hours.
Yeah, over like a little bit of
Yeah. And this is actually a spreadsheet where I key in the variables in the table above to be able to
Sorry
like.
guys, a little bit small. Do you think
Okay,
you can
let
zoom
me-
in a bit?
Yeah, I definitely can. So I will have to do a bit more scrolling. So this is a comparative study, cost versus returns. So on the top left-hand corner are the property details that I need to key in. Okay, so let's just say what's your age, and this will matter because it will determine what year that you enter into this loan lah. Okay, so let's just say you're 25 lah. Okay, so it's still here. This is fixed, but this is the age. If it's 30 years, 30-year kind of loan, right? Oh, I still key in 30. Sorry, no wonder. Okay, so let's say it's 25. Property value that I'm planning to buy is, let's just say 700,000, or maybe you can put it less, 500,000. Okay, I key that in. Now, what is the property size for 500,000? I think Louis, can you get a landed in Miri? Nice location, 500,000. No way, right? How far?
No, quite far. I would say from town maybe at least 20-30 minutes drive away.
Okay.
Yeah. That's relatively far in Miri, yeah. KL maybe not, but in Miri considered far, yeah.
Okay, I'm gonna straight away show you how I built the spreadsheet on the fly, so that then yeah, I can do this. So 25. If I do 30 here, okay, on the fly now. Okay, so let's just say 25 years old. You decide you want to buy 500,000. I would guess it's a condo. Maybe in Miri, I don't know whether it's picking up yet, but even Kuching, there is condos that are around this price, 1,002 square feet.
I think condos not really lah, but we do have quite a bit of like apartments also costing about the same, like 400 to 600K. Yeah.
Okay.
Yes.
So 500,000, 1,002 square feet. The rule of thumb is somewhere around like 20 cents per square feet lah. In KL, it's very easy for you to pay like even 30 cents, 40 cents per square feet lah. I know there's one condo in around my area. They charge 80 cents per square feet.
Wow.
So that means if you own 2,000 square feet, the property, you have to pay 1,600 a month in terms of maintenance. Quite insane lah.
Wow.
1,600, you can actually pay rental for another room or something. But anyway, I put it very low lah, 20 cents, okay? So current rental, if I were to find something for 500,000, 1,002 square feet, probably about 2.5 a month to 3K lah, about 3K. KL I'm talking about KL prices, benchmarking. Now I'm not going to show you where to find the benchmarking. Very easy. You go to iProperty lah, you go to Muda, you can get the numbers. But this is from what I've done the research and I kind of remember. So then you have to take a loan and you have to be very aware of the loan interest. So right now it's roughly about 4.5. Okay. So your monthly installment, if you change this, let's say you change it to 4%, right? Your monthly installment will change it automatically. It's already built into the spreadsheet. So let's just say now it's really 4.5. Your monthly installment on a loan of 500,000 the current rental is 3,000. Your monthly installment is 2,280 bucks at a 4.5% interest rate. Now, a lot of people will say, "Hey, but loan installment cheaper than rental. You should straight away go and buy, correct?
Mm.
Because it's like cheaper by
Yeah,
800."
well, just by looking at the numbers right now, you have like a difference of 720.
Correct.
Yeah.
But you haven't included your maintenance, 20 cents per square feet.
Oh, yeah.
You haven't included your quit rent, You haven't included all your other upkeep, Okay, all this 3,000. Yes, they may not lump together electricity, water, and all that, but that's a few hundred ringgit only, right? But all the other things, fire insurance that the homeowner have to pay, homeowners insurance, all those kind of things are lumped together that you don't need to worry about if you pay rental, You get what I mean? And if you get a rental of 2.5, wow, lagi lah. It's like it makes so much sense to rent, right?
That's true.
So let's just say you bought this condo as an investment property to gain some kind of return. And you said, yeah, I pay installment, rental, I get 3K. Yeah, maybe I can get cash flow positive, 700 something. Okay. That said, it's okay, even though I have to fork out, or even if it's like my rental is 2.5. Okay, rental 2.5. And I adding all my costs, I have to fork out negative every month. Then I said, don't worry, when I sell it, I'm going to get capital gain to actually pay back whatever I lost in terms of the difference of how much I pay for installment versus the rental I'm getting, right? Actually, I beg to differ, and I'll tell you why. Very simple. Let's look through the whole math, then you understand. So the rule of thumb is when you buy a 500,000 property, the down payment, renovation, plus your legal fee, MOT just stands for memorandum of transfer. So just to be to give the nuance to a new homeowner, when you buy a property from someone, you need to transfer the title from that, either if it's a brand new property, a developer, or the first owner over to your name. And when you transfer that title, there is a stamp duty based on the value of that transaction. Okay. And it's usually, if it's a 500,000 property, the rule of thumb is roughly about 20 over 1,000. So I lump all that together as part of what we call your entry costs, because you have to pay legal fees, pay down payment, you have to pay the stamp duty, and you have to pay all these renovation costs. So all in, actually I'm being very generous. Generous being in the low side is 20%. So a property of 500,000 at 20%, right? Roughly your entry cost will be here, 167,400. Okay. Now, why is that? Is because under this entry cost, I actually have a table that I've gotten from the legal practitioners. Okay, look based on the loan amount. This is how much they charge. First 1%, 150,000. How much is minimum, and then the stamp duty, your memorandum of transfer or your MOT. So there's a table. There's a if else already. If it's like the property value is a certain that one, then how much is it going to cost you in your stamp duty and also your legal fee. So it's all lumped into this already, actually. Am I making sense to you, Louis?
Yeah. I just saw 167,000 just to
entry cost.
Entry cost at the age of 25.
Yeah. And this is upfront. No loan kind of joke. It's like upfront, okay? Yeah, even for me, when I bought that house in Miri, Louis, I took a 50K loan that I had to repay my father with interest. I didn't want to take a gift. I repaid him in interest in full. Okay. Now, so when that is so once you start paying that, you thought, good, I've already paid my cash, and then that's where I can continue paying just my loan, right? You have to pay a lot of other things, your installment, all this kind of thing. So I want to show you, at 26, your installment per year is 27,361. That's 2280 multiplied by 12 months. Okay, round up. Then your maintenance cost is this, is 2880. It's 20 cents multiplied by 1,200 square feet. The whole year It's quite cheap It's still quite cheap, okay? So your total cost for entry plus your first year of installment plus maintenance is 197. So you see here this column that says total cost. All this is actually a cumulative cost from your entry cost plus your installment maintenance every year, and it just piles up all the way until the end, your total cost to own this property over 30 years will be 1.1 million lah, virtually lah. So far, you understand the table? So this is what you pay in installment. This is what you pay in maintenance. Okay.
Super detailed. So
Yeah.
it's kind of scary looking at the table this way. I think a lot of people, when they buy something so expensive, right, like a house, they try not to look at the table like that.
Correct. But if you really want to like really surface up all your hidden costs, this is the only way.
I think so. I think it's very useful. Yeah.
Next, they said it's okay. John, Louis, rental now 2005, but I can collect higher rental because it's good location. There's very much high in demand. I can increase, right? I give you a generous one. You think you can increase your rental yield 3% every year? Every year your rental increase by 3%.
Yeah, maybe not lah. Maybe not. Yeah.
But even if you increase every 5 years, even if you increase by 10%, right? You average it out, I don't think it will still beat out this 3%. 3% is very. The point I'm trying to make is 3% increase every year is very generous.
Yeah.
Okay. You can play around with it. Let's say I put 0 lah. Okay. Let's say you put 0. That means rental is fixed for the rest of its 30-year tenure, right? So let's look at the returns. So what happened is, once you do that, my rental is fixed. You see here rental gains under B. Rental is fixed over the next 30 years. So total rental collected 900,000. Okay. Let's just say I'm willing to sell the property at how much do you think 500,000 after 30 years? Condo, how much do you think you can sell it for? 10 million?
No, definitely not. Maybe a bit less than 2 million, like 1 point.
Correct. So
1.7.
1.9. I don't know precisely what's the figure, but at 5% every year increment of capital gains, you can sell the property for about 2.1 million, roughly there. That means every year, roughly, you average out 5% gain. So roughly about 2 million, okay? So because of that, you started off 500,000, 1,002 property, rental 2.5, okay, and no increase over the next 30 years, which is almost impossible. But then you have a capital gains increase 5% every year, compound every year until you hit your 30th year. So your total cost would be 1.12 million. Okay. You sold the property for 2.1 million. The total rental collected is 900,000. So 2.1 plus 900 roughly is about 3 million. Okay. So what is your gain? Your gain is actually only 1.9 million. Can you see over here at the bottom?
Net returns, okay.
You fork out 1.12 million as your cost, okay? And your returns from your selling the property plus your rental, you only get back about, minus off your loan balance, you only get about 1.9 million. So you go and calculate the KEGA.
Over 30 years.
Over 30 years.
Yeah.
I actually don't even need to go into very detailed KEGA. Let's say you fork out 1.1 million, right? You put in a compounding of, let's just say, 10% a year. Okay, 10% a year. 10% a year, based on rule of 72, that means every 7 years you double your money. So in 30 years, 30 divided by 7 is how much, roughly? 4 times? 5 times? 4 times?
4 point something, yeah.
4 point something. That means you would have doubled your money 4 times. If you had put money, 1.1 million, into an investment vehicle, yeah, so 1.1.
10 million.
Yeah. Can you imagine? Here, we said property is a good investment. Really? If you put the same...
It's because it's something tangible, right?
Precisely.
Something tangible that, I can see I have a house. I have 10 houses, versus like, I have like some papers telling me I have some money in the bank.
Correct.
It's that emotional drive that makes people want to buy. And even for an investment, I don't think many people like calculate it the way you do in a meticulous way. So yeah, I think, but even then, like John, can we can we use this kind of calculation to also decide if we should rent or buy?
This is precisely why I decided to put this up, because rather than think of it is to be so specific on just one property, I'm giving myself a gauge to say that what is my opportunity cost? At the moment I put up this money, I'm stuck with the loan for the next 30 years. The only way I can get out is to sell the property. Am I correct? If not, the liability is there. for the
Yeah,
next 30
correct.
years.
And I think if you sell it like before 5 years, there's other like additional
RGBT, another 10% or 5%, I can't remember, of the
capital
property
gains
value.
tax,
Capital
right?
gains tax,
Yeah,
real
yeah.
estate capital gains tax. Yeah.
Correct. So there's also a lot of like things that maybe as a young person, yeah,
It's
you could-
overwhelming lah.
it's it can be. I cannot imagine like the age is 26, is it? Like
Yeah,
to
25,
buy
26.
that property and then like have your money tied up in this one big expensive thing, you know, and then have only a bit of leftover for other things like personal development or even investing, right? Over time, if you look back, wow, it's all I have now. It used to be like one thing that's good to have because other people have it, but now it's all I have.
Yeah.
And I have friends who have this problem. They actually like bought this very expensive house. So between them, they paid like the married couple, they earn quite a bit, like 5 figures, like more than
Both
10K
earning 5 figures each, right?
each. So
Yeah.
like I think maybe like 14K plus like 12K, something like 20 something K. They're like, oh, you know, we can afford this property, and then like each month they were servicing about 7K. Yeah.
Wow.
So then they were like, okay, we want to finish this loan within like a short period of time, like 10 years. So that was like 7K lah. Then it was like quite overwhelming for them too, because of because like they really expanded their lifestyle. Even though you see like it's not really that little money, but like due to how they managed it, they ended up like in the end not doing very well lah.
Almost
Financially.
living paycheck to paycheck lah. Because
Almost
service alone and all that lah.
almost
Yeah.
living paycheck to paycheck. So I think this is a great calculation. But again, just the calculation, this is for if you really want to get down to the numbers. But obviously, buying a house is not just about the numbers, right, John?
It's also definitely not just about the numbers, and it's also more importantly is this. You gotta figure out like what is the objective, as I said earlier. If it's emotion, if it's somewhere you need to stay, it's gonna be an emotional decision. No matter what I put on a spreadsheet, you like the house, you like the view, that kind of thing.
This is my home.
This is my home, it's okay, Then my question to you is this, right? This is the biggest lesson that I want to take. If you don't remember anything from the numbers and all that, this is the biggest thing that I want you guys to leave this episode with. Don't underestimate what you can do over the long term. Because most people will overestimate what they can do in the short term, but underestimate what they can do in the long term. And I'll tell you why. They settle. What do I mean? I cannot afford nice house. Just imagine, if you had a choice in KL, you would live in a Bangsa, Bukit Duku, Bukit Damansara, right? But then you're thinking, the house 5 million, right? Even the cheapest, the most chikai terrace, 30, 40-year-old Bukit Damansara house is going to cost you about 1 point something million, right? And yet these people earn 50K a month. And they say, I cannot afford it because it's too expensive. Or not, don't put 50, let's say 20K a month. And they have to buy an 800,000 house somewhere in Senawang or somewhere in like Bukit, some Bukit Jelutong or some godforsaken place. Why? Is because this is at this current moment, I can only afford this kind of, after deducting all my expenses, I can only afford this kind of thing. And yet they spend 1 hour commuting one way every day.
Yeah, correct.
Right?
Correct. Yeah.
Why do they do that? Is because they settle. They said at this moment my capacity is like this. And they're willing, they're not willing to take slightly more of a delayed gratification and says, hey, why can't I work my money first? Because if I've done the calculation for you, right? Maybe in your 20th year, if you know how to invest, when you hit your 40th birthday, the amount of money you have from your investments after compounding for 15 years, easily you can buy the house in cash. That's the point I'm trying to make. Obviously, I can't show the numbers here because it details on that one. But the point I'm trying to make is, instead of like thinking I settle, I can afford it now, and I buy a house in Putrajaya, Cyberjaya, it's a big house, but it's cheaper because it's further away, versus that, hey, can I stay in KL? I save up more time for myself, right? I do development myself. I attend investing classes, or I read books. I know how to like invest other things better, right? Or I start a business and I make that kind of money and then compound that money. But the 40th birthday, right? You want to buy a house, a summer house in Genting or a winter house in somewhere else, you can afford it. That is the lesson that I learned myself, you see.
That's a very, very like interesting lesson that I think that most people don't talk about. You know, there's also a stigma around like not owning a home. I guess it's quite an Asian thing probably. If you're not a homeowner, you're kind of like a failure to a degree, you know. It's kind of really gonna take a lot of emotional discipline to say, you know what, it's okay. It's okay. I know what I'm doing, you know. I've run the numbers, you know, the opportunity cost would be more. Like I can't imagine really being a young person having to have like more than half of your income, right, tie up in
one property. Yes.
But then, John, another question would be like, okay, there's also some school of thought. You shared this Ramit Sethi's article with me, and I followed Ramit for a long, long time since I was 20 years old. It's been like 15 years ago. So he is a proponent of like always renting. So that's another way to look at it, where, you know, you're saying now, okay, you know, save up 40 years old, you probably can buy in cash. But what if like they don't want to buy it all? Is that a good idea at all?
No, it's fantastic. And I'll tell you why. I never thought I would move from Miri because as a young, naive 25-year-old, 24-year-old, when you got a job in Shell, wow, that's it, you know, set for life. Right. You and I know today in the world is a very globalized world. And the very successful people I know, they are globetrotters. So when I say globetrotters, meaning they don't just confine their businesses to one area, one location, and even career trotters. That means if you somehow find a job in Miri, don't use Miri. Let's use KL. You're a banker or you're IT consultant. You work for Accenture and you found a job in KL, right? The heart of Malaysia, capital of Malaysia. If someone offered you a job in New York or London, you don't want to go, meh? You see what I mean? You have to expand your career, ma? Or they offer you, let's say you work for Nestle, they offer you a posting in Europe, in Switzerland, right? And at that point of time, let's just say when you get to Switzerland and you get to Europe, and then you realize, hey, you're so good, don't need to go back to Malaysia, lah. You become an employee global headquarters already. Then what are you going to do? You have this burden that you're stuck with a property back there, you know. And that's one thing that I realized, right? Renting has a huge advantage because if you really want to afford a home that at that point of time, when you are, let's say, VP for global for Nestle, right? You can easily buy few homes rather than, and if you're very good at money, managing your own money, and you have the investing skill set, right? Whatever money that you are making all this while, rather than putting it into one fix that ties you down in Malaysia kind of home, you can actually invest in global assets that's liquid, that when you are ready to, suddenly I just realized I'd rather migrate to Switzerland, right? There's nothing tying you back already. So I'm with Ramit Sethi, but it's not for everyone. I still want one home that I can come to, that I can renovate, whatever. So I've made this conscious decision that only one home. I used to be a property investor, Louis. I used to own 4 properties.
Okay.
I don't know whether I shared this with you. I used to own 4 properties. Then I realized, right, one is a rich man's game, and I'm playing it as a poor man. Two, I stuck myself. I got tight myself, and I look back, right, long to short, the math, right, if I didn't buy my house in Miri and I put it all into investing with very low returns of 7-8%, right, the amount of money I would have is about $1 million extra. 1 million, in cash.
Cold hard cash. Wow.
Yeah. I don't know about you, but $1 million is quite a lot for me, lah.
Yeah. I think given the alternative, right, which is like, you know, like a property that, you know, didn't really like increase that much.
Yeah.
Okay, so I think the lesson here is to take your time, know your numbers, to also know where you're headed in terms of your career. I also know like a good friend of mine, a very, very close friend of mine recently. So she worked in Bintulu for the longest time. Recently, she got offered to apply for a job in Paris. But she recently bought a house in Bintulu. So I don't know what she's going to do about that. It's about 400K property. You don't know. You don't know. So, yeah. So if you're open to work with anywhere, I'm not very open to doing that. Like, okay, just move around. But if you are, you know, like, yeah, quickly buying properties can delay a lot of things, like, because you need to liquidate the property, etc.
Correct.
It takes time, you know, and maybe having more cash is better if you're moving around.
Yeah.
Yeah. So I think so that's I guess that's all.
Yeah, that's all. I think
Cover.
more importantly,
Mm-hmm.
get to know your numbers, differentiate between whether it is for own stay or for investments. Because if it's for investments, it's even more important for you to run the numbers. And last but not least, what's the rush? Like what you said.
Yeah, no rush.
No
You
rush.
know,
Don't-
even if your friends are doing it, just do it
What's
at
the
your own
rush?
time.
It's your money. Remember, your money, your life, not someone
Yes,
else's that you
correct.
need to impress, right?
Correct.
Yeah.
So I hope that our little bit of sharing around properties and how to run the numbers and how to decide will help you to make your own decisions. So if you have any questions around this, feel free to drop them in the comments below. Again, thank you so much for watching this video. If you like this video, give it a thumbs up. It will help us with the YouTube algorithms. And if you like our channel and want more content, do subscribe to WangHiro. We'll see you in our next video. Bye bye.